What's up, families? Book club time. We got another great one. This is really interesting compared to the one that I posted last time. This is a Learn to Earn. Peter Lynch, he ran the Magellan Fund for Fidelity for about 20 years and consistently outperformed the market. So this book is a little bit of a contrast to A Random Walk Down Wall Street, the last one in the book club, where it talked about diversity and how hard it is to beat the market. Well, Peter Lynch actually did it consecutively as a money manager and just completely dedicated to his craft, you know. But this book is really good. It dives in a little deeper on the history of capitalism, the founding fathers. This is really interesting here. It says, when a group of people goes into business together, they usually form a company. Most business in the world is done by companies. The word company comes from a Latin word that means companion. The formal name for a company is corporation. Corporation comes from corpus, another Latin word meaning body. In this case, a body of people who join together to conduct business. So, and he goes through different types of economies. The economy in the U.S., during the Civil War times, and then and really fun, interesting facts about the Dutch East India Company, the history of the slave trade. Matter of fact, the first millionaire, let's see if I find that down the road here. But it was a gentleman who was actually opposed to the slave trade. I don't have his name here, and Alexander Hamilton as the father of the financial system, what he set in. Benjamin Franklin, Adam Smith, all of those great minds. John Locke, The Wealth of Nations. Spoiler alert, that's one that's coming. But the book really takes a fun dive into, and he's so well written in the way that he articulates his points. He's just very concise and very matter of fact, you know. But let me see. There's a couple more in here that I marked just to share here. Yeah, this is awesome. This brings us to, okay, so think about my last book. It was all about diversification and not taking risks and not betting on stocks and taking, this is a slightly different perspective here. Ready? This brings us to the numbers. That a company makes a popular product doesn't mean you should automatically buy the stock. There's a lot more you have to know before you invest. You have to know if the company is spending its cash wisely or frittering it away. You have to know how much it owes to the banks. You have to know if the sales are growing and how fast. You have to know how much money it earned in past years and how much it can expect to earn in the future. You have to know if the stock is selling at a fair price, a bargain price, or too high of a price. Your job as an investor is to make educated guesses and not blind ones. So it is, though it may be highly improbable to beat the market, the stock markets, bond markets, crypto, whatever, that doesn't mean it isn't possible, okay? And he talks about different types of companies, right? Small, mid, and large cap companies. And why large cap companies are oftentimes less prone to go out of business. He says, first, big companies are less risky in that they generally are in no danger of going out of business. Secondly, they are likely to pay a dividend. Third, they have valuable assets that might be sold off at a profit. And then all of the different areas of corporate litigation, right, and corporate accounting, and how companies will change, they'll do a reverse split or a forward split, or they want to manipulate the stock price to get more, have a lower stock price to garner more investors, right? Or they do share buybacks, or they do hostile takeovers, friendly takeovers, spin-offs. So you get the point. Again, I'm rambling here and I'm getting down into my passion again. But if you want to know about the history of capitalism, corporate finance, how you can attempt to outperform the market. Law of averages, it's a losing strategy even for the top money managers over five years. If you go out 10 years, the odds are, it's like less than 95% of beating the market consistently over 10 years. But with that said, if you want to learn, he has stock picking tools in the back, and he has a lot of really interesting balance sheet information, and it's a good one. So highly recommend it. Pbo! Hey, if you want to subscribe to my YouTube, always interested in feedback on how we can make it better. So thank you guys. Love you.